Good evening, everyone. How's everybody doing this evening? My name is Lawrence Slatty, also known as Mr. International, host of Financial Independence Through Small Multifamily Investing. We're here every Tuesday at 7 p.m. Tonight, we have a guest from, well, he's tri-state, right? New York, New Jersey, Philly.
Right.
He went from 0 to 35 rental properties in 6 years. And tonight, Pierre Streat is going to tell us and give us some tips, talk about his ups, downs, right, and challenges that he faced in these last 6 years. But most importantly, he's going to talk about challenges too, because sometimes a lot of people talk about, the roses are always red. It's so great. Everything real estate is so easy. And that is not so. But before we begin, we're going to go around the screen. And I'm going to ask everybody, please turn your cameras on if you can. And just introduce yourself. So we're going to start to my right, your left. Marquise. Go ahead, Marquise. Fix you. The technical issues. Go ahead. Marquise. Okay.
I'm here. Perfect. Well, thank you for the opportunity, Brother Lawrence, guys. I'm a real estate investor here in the Metro Atlanta market. I've been in the business 5 years, built a 7-figure organization, and we've transitioned into the multifamily space over the past 2 years. So we're still doing single family deals, doing multifamily as well. I'm excited to be on here. This is my first time on here, Brother Lawrence, but I definitely will be back. And I'm excited to connect, man. So guys, let's connect any way possible, man. I'm here to give any type of value I can and connect with you guys, but I'm excited to be on and learn, man. Thank you for the opportunity.
Thank you for coming, Mark. It's good to see you again.
Yes, sir.
Matthew. Go ahead, Matthew.
Hello, Lawrence. Thanks for having these meetings. Highlight of my week, my man.
Thank you.
My name is Matthew. I'm a multifamily investor. We operate short/medium-term rentals out of our multifamily property. I'm based out of Ohio, Cincinnati, Columbus area. And yeah, we're looking to grow our multifamily portfolio. These hotels we're running out of multifamily. And yeah, that's me, Midwest.
Thank you for coming, man. Thank you for coming. Once again, please don't forget to put your information in the chat again, because this is a networking event and people have to get to KLT, know, like, and trust you. You can't trust you if they don't know you. I can't get to like you if they don't know you. Again, Lawrence Slatty, Mr. International, hosts this meetup here. Like I said before, I met Pierre Streat at the Diversity in Commercial Real Estate Conference. And he's talking about he's from New York, New Jersey to Philadelphia. He's originally from New York. He's a transplant, but now he's put his roots into Philadelphia. And he's going to tell a story about like I said before, his transition from 0 to 35 properties in 6 years and what he did. So, Pierre.
Yes, sir.
I appreciate you taking your time.
Absolutely.
The floor is yours.
Yes. So thank you guys for taking the time to listen to my, Meetup presentation. Larry, thanks for the opportunity. It sounds like a lot of folks on this call are pretty experienced. So, I hope I can add some value to the call. Just a quick background. I'm originally from Barbados. I lived on the island, for the first 14 years of my life. Emigrated to Brooklyn, New York, which is where, I pretty much went to college, played Division II tennis, and fast forward, worked on Wall Street for about 10 years in the securities lending space. I think, my mindset, even in college, was, I read Poor Dad, Rich Dad. I read The Intelligent Investor by Warren Buffett. And I think, those two books sort of sparked my interest in the investment world. So believe it or not, I was pretty maniacal about frugality and saving money so I can invest in stocks, ETFs at the time. Because, I didn't have enough for a down payment back in college. But I guess my point is that I was since I was in college, I had a mindset and a focus on a real estate target. So after about 2 years on the street, lived in my parents' house again, saved up and bought my first building in Brooklyn. It's a duplex. I lived on the top floor and rented out the first floor. That was back in 2010, when there's Obama tax credits and whatnot. So I pretty much got the down payment paid for by that tax credit. And once I first got that first purchase in Brooklyn, it kind of opened my eyes on, just the power of leverage in real estate, the depreciation, against my W-2 income on Wall Street, just the benefits of that and tax write-offs and whatnot. And, I just sort of knew from there where I wanted to spend the rest of my career, which was not in finance. So this is around 2011, let's say now, and real estate prices in New York were sort of picking up, and I wasn't seeing cash flow deals. So I started looking around, actually in Ohio, Philly, and Baltimore, just looking for undervalued real estate that cash flows and has some potential upside based on the demographics, et cetera, in the city. So I landed on Philadelphia. So while I was working on the street, I'd buy a property a year or two in Philly, pretty much not even through my savings account. It was just via refinance in my building in Brooklyn. And then just multiply from there every year, just buying a property until I got up to about 6 or 7 in Philly, and met a partner by property 6. And actually at Adiola's event, it was actually an event in the Bronx, Larry, 6 years ago.
Wow.
And so I credit Adeola for my success, to be honest with you. We'll talk about networking and whatnot, the value there, and yeah. So yeah, and I just multiply from there. My partner, he was higher up at Goldman. He was much better with the modeling. I handled more things on the ground, the construction side of things, locally. And, we just complemented each other, our skill sets, and we still do. So I got lucky in that respect. And, just the rest is history. We just sort of, multiply from there, and buying buildings in Jersey, Brooklyn, Philly. So between the two of us, we've got about 50 units, between Jersey, Philly, and New York. But the majority of portfolio is in Philly, which is about 35 minutes. And we did that within a 5-year or 6-year time period. So that's my intro. I'm not sure, Larry, how deep you want to go into, different aspects of that story, but I'd be happy to do it.
Well, I tell you, let's just talk about how old were you when you started investing? That's the question.
Good question. Sorry, I missed that. So the first building when I bought in Brooklyn, I was 23. So, okay. I went into Wall Street at 21, worked there for 2 years. Lehman Brothers, well, actually it was Barclays. So yeah, I got hired through Lehman, was there for about 3 months. And then Barclays gave me an offer. So yeah, 2 years at Barclays. And again, I was very, very maniacal about saving money at the time. I was raised by a single mom with 2 other siblings, tough situations in Barbados. So, I made up my mind at a very young age that, I wasn't going to live like that. I wanted to help my family. So yeah.
Okay. So now you help your family, Now you talk about meeting your partners, you talk about networking, right? Because I'm a firm believer that you have the network. Right? You must network in this business. In any business, you got to network to find the person, because one person can change your trajectory real fast, right? So now tell us about the event that you went to. How did you find out about the event, and how did you and your partner meet? And what the criteria?
I guess it was just sort of stars aligned. I always try to attend as many real estate events and when I was still living in New York as possible. This was when Adeola was just starting that Avant-Garde, I believe is the network that she was starting back in the day. So I just randomly went to, after work, just took the train up to the Bronx, just went to the front, listened, participated. And he actually approached me at the end of the conference. And his words were literally, "I can see that you're ready." That was the first thing he told me. And he's about 10, 15 years older than me, FYI. And then, we literally chatted for about 4 weeks. I showed him the proof of that's the other thing, proof of concept. At the time I had 6 units. I did it all with my own capital. and he could see the proof of concept. So it was a much easier sell, versus property 1 or 2.
Right.
So that would be sort of my advice as well. Try to do it on your own, at least for the first couple. Have proof of concept, such that people can believe that you're not just blowing smoke. And once I plugged into him, then we had just ample amounts of capital we bought about 10 or so properties a year, 10 or 11. Right. And he was able to get most of the financing for us. So that really helped me amplify, because I was just seeing wholesale deals, good deals coming through daily, and I just couldn't move on them because of lack of capital. Right. But with the right partner who, 5 times wealthier than me, has a 10 times more larger network, so it was just easier to get the capital to move on this stuff, which was super helpful in terms of growth.
So I know that the topic, right, that was put out, I made a mistake with that because I misconstrued what you said, right? So I thought you had but multifamily. So you're doing residential multifamily, right? And for somebody who's new, residential is 1 to 4 units, and commercial is 5 units and above. And I tell people, this is my thoughts, that not all the time you have to walk to your own beat, not to everybody else's beat. Because a lot of people, you need to get 100 units, you need to get this, and you get that, right? What made you stay in your niche with the single family, or what I call it is residential multifamily?
Well, to be honest with you, it was more low-hanging fruit. I mean, the Philadelphia housing stock is pretty heavy single family, row houses, and just the cap rates and cash-on-cash returns were higher than the larger multifamily deals that I was seeing coming through the tape in Philly. So, that my focus was more scaling and growing, right? I'd rather, buy 10 houses versus, a couple duplexes that, kind of didn't pencil. But plus Philadelphia, you got to model stuff such that it cash flows. Because if it doesn't, because it's not like New York where you're going to get, 2x appreciation in a couple years, right? So you gotta make sure this stuff sustains itself, hoping that you get a decent amount of appreciation sooner rather than later.
Okay. So before you go on, let me see. You said model, right? So Jay is new. So I'm out of Atlanta, Georgia. I'm new to the field, ready to connect to gain more knowledge, some knowledge. So when you say model, how do you model? When you say model, what do you mean by that, number one? And how do you underwrite the area that you're looking for, right? And how do you underwrite the property?
So how do I underwrite the area? Just by doing drive-bys, right? Like I'm pretty familiar with, because Philadelphia is made up of a lot of colleges. So number one, you want to stay as close to the colleges as possible. UPenn, LaSalle, Drexel, Jefferson University. So that was sort of my, I guess, top high-level criteria. Okay. And then, I drive the areas, see which blocks have commercial quarters a block or two away. That'll be my second, checkbox. And then, just drive down the individual blocks and see, how, the owners are upkeeping the properties, right? Because Philadelphia is I stress that, very, very block by block, right? So, you could buy a property that's 2-3 blocks north of Temple. And in that Temple area, actually, the cutoff is Dauphin Street. Anything south of Dauphin Street, you're getting $300 to $400K for a single family. Anything north of that, which is like 2 blocks away, you could barely get $250 for a 5-bedroom sale. People, it's very block by block. So you got to be you got to have someone on the ground, right, to know this stuff. It might look good on paper, and appraisers, when they value this stuff, they probably go about a mile out. You might get lucky there on a refinance, but if you ever have to liquidate, and again, being mindful of the debt relative to the cash flow that you're bringing in, debt service ratio, a lot of these appraisals are very subjective. You kind of don't want to lever up too much. If you can't sell at that price point.
So you said something else also about block by block, right? So when you went to Jersey, right? What part of Jersey did you invest in Jersey?
Burlington.
Okay. So now Burlington, how did you figure out what made you want to invest in Burlington?
That was at the leadership of my partner, right? He led those deals. He kind of just, because he's in Manhattan, right? So he would go over to Jersey and look for the deals. And I just follow his lead at that point, right? Like we already built up that relationship.
Okay.
Yeah.
Okay. Yes. So now how did this relationship that you built with your partner, how did it change? How far? What do you see coming up down the road?
So that's a good question. So now we are actually trying to pivot into industrial. With the interest rates pretty much doubling, cost of capital is really expensive. The single family deals now are not even penciling in Philly. So we're looking more for a defensive play because this is just our opinion. We don't think the correction has happened just yet. I mean, I know inflation is still relatively high, the Fed's still raising interest rates, but we personally don't think the crash has come yet. So we want to sort of pivot into a more defensive play like outdoor storage, self-storage.
Okay.
Again, the cap rates are not going to be significant, but at least, we can park some capital somewhere to weather the storm. And, people always need, especially with this e-commerce world that we live in, right? People always need Amazon. They always need, stuff to be shipped to the house. So it's sort of, a more defensive play and diversification play.
Okay.
For the portfolio. So that's what we're looking at right now. That's why I mentioned I want to look at Atlanta because I want to see if I can find some industrial deals down there.
Okay. Okay.
Yeah.
I was about to ask you, took my question. I was going to ask you, what's the next move? Okay. So it's going to park your cash someplace, something safe, look and do something that you see about what's going on as far as Amazon. Because even here in the Bronx, they're building two on the other side, like down the block from each other. They built two mega logistics centers, right? So what is so you said Atlanta, right? Is your next looking at Atlanta for self?
Yeah, all over the country, but yeah, Atlanta is on the list. Yeah.
Okay.
Right.
So you say all over the country. So now, what are your criteria for? Because you talk about Philly's block by block. What is your criteria? Hard stop criteria for areas that you're looking to invest in.
And for the industrial space.
Industrial space, yeah.
Yeah. So I mean, close to an industrial, I guess, park. But more importantly, because I'm looking more at like to truck parking.
Okay.
So, for example, and this is just high level macro data for every, I think it's for every 2 million truckers, or 3 million, there's only about 400K parking spots in the country. Right.
Okay.
And these guys, they spend an additional 5 to 10K a year. Let's say 5K, just driving around aimlessly looking for parking. And that's why a lot of times you look on the I-95, they're just parked on the side of the exit illegally, right? So there's a huge demand there and a huge problem, with the truck parking and outdoor storage. So criteria-wise, I want to be, max 2 miles from an interstate. Not really interested in those Route 22 or whatever, those smaller highways. An interstate, a shipping terminal. And like I said, industrial park, max 2 mile distance. And at least 3 acres on the small side, but we can probably take down a 100-acre site. And, we're looking to either develop it, which, pay fence, lighting, cameras, or buy something already developed, for a premium, and yeah, just operate the truck parking.
Okay. All right. So now I'm gonna get back to the housing, right? So now
Mhm.
do you have voucher tenants?
I do not.
Okay.
Mhm.
Okay.
I
And
do
why?
not, and that's not by preference. That's just
Mhm.
unfortunately in Philadelphia, the housing authority, it's just they're not. And I'm trying not to be blunt. It's not very easy working with them here in Philadelphia. I mean, I'm sure in other parts of the country it is, but unfortunately in Philly, it's just tough to operate under their umbrella.
Okay.
Yeah.
Okay.
Mm-hmm.
Okay. So now, what would you say to someone who's just starting out, fresh out the box? What advice you give somebody fresh out of the box on starting out in real estate today? With the high interest rates we got going on, with all this going on, right? What would you what suggestion would you offer to somebody starting out?
Well, tell me a little bit more about who, like, the age group, like, where are they in their career? Are they fresh out of college? Are they in college? Or what's?
Okay, they're they're saying that mid 20s, they're looking like you to get started in real estate. They
Right.
know they don't want to. They know they don't want to be living. They don't want to live. They don't want to work forever, right?
Mm-hmm.
They want to do something to create some extra income, and also something that can. And mind you, 9 to 5 is nothing wrong with having a 9 to 5,
Right.
but they want to also help to add to the income.
Right. Yeah, I mean, it's tough right now. Like, honestly, I mean, with you got 30-year mortgages, what, 7 to 8% now. Despite the rates being super high, prices are still high, and it's probably more of a demand supply problem there. So it's
Mm-hmm.
tough to find deals that make sense. I guess if I'm in my 20s, I would obviously I would be playing the treasuries right now, to be honest with you, at 5.5%. But I think networking, I think, you know, just getting your name out there, and maybe it's that's a good question. I think the market is tough for a young person today. Starting out. I mean, you tell me, like, what good deals are you seeing?
Well, I'm not. Listen, I'm looking at some
Yeah.
of these. I'm like, these people, they still think it's 2021 and 2019 and 18, right? And they're not willing to understand that it's not that kind of party anymore,
Right.
right? And I think also the fact that sometimes, even the multifamily properties, raising rents is not raising rents is not going to be like it was before, because I think
Mhm.
right now the tenant base is getting tired of these high rents.
Right.
And before you know it, there's a lot of counties in the United States looking um to to start, right, talks in about talking about rent stabilization or
Oh
rent
yeah.
control.
Yeah, that's a big topic now in Philly. And the rents here are already low compared to the country,
Mm-hmm.
right? But yeah, and that's another reason again why we're looking to diversify and
Okay.
sort of take a break from the resi side, let
Mm-hmm.
things settle down a little bit and go into the industrial space because the exact reasons that that you just mentioned. That it's a very, I guess, in Philly, it's become more anti-landlord, definitely the last 2 years, 3 years,
Mm-hmm.
2 years. Yeah.
Okay.
So that's part of what I mean about hard to operate.
Okay.
That's the other thing too, right? A lot of times if you look at, and I've learned this the hard way, these deals pencil, it look good on paper. But once
Mm-hmm.
you start scaling, the operational risk becomes higher. And if you have a municipality that's looking at you as a villain, you can sort of see why, oh, maybe I should pause a little bit. Maybe I should sell a few of these things and pivot into something else because these folks don't want me here.
Right.
You know, but you know, you just got to play the cards you dealt and keep it moving.
And there you go. That's for sure.
Yeah.
That is for sure. So I'm gonna throw us out to those who are here. Thank you for that. So one more question. Okay. So now one last question. Then I'm gonna
Sure.
last.
Hmm.
So you said Union Partner bought 11 properties a year for the last 4 years or 5 years?
Last 5 years in Philly. Yeah, Philly's been the
Really?
focus the last 5 years.
Okay.
Yeah. Mhm.
Wow. Okay. So now, what I'm going to ask you before, were these properties in really distressed properties, or they were just something put a lipstick on look like the old terminology put lipstick.
No, it's a good question. So I would say the first six properties that I bought, between 2016 and 2018, those
Mhm.
were more turnkey, right?
Okay.
Because you would find you could have found like when I say turnkey, I mean old lady in the property paying 1,000 a month, property's in good condition, 30K purchase price, 1,000 a
Hmm.
month, right? Those deals used to exist in 2017, but as the market got more competitive, you would by 2019 that same 30K you'd have to buy a shell, right? Just bare
Hmm.
wall, maybe a few beams, and fully gut the thing. And it just got worse over time as Philly became less of a secret and more competition came on the
Hmm.
field, which is good for people like me who bought at cheap prices. But yeah, we fully got renovated pretty much all these houses except for the first six that I had on my own.
Hmm.
So new electrical, new plumbing, and I'll share some photos with the group. Drywall, the whole works. I mean,
Okay.
I had probably 3 to 4 construction sites at different parts of the city every day, just running around managing job sites.
Okay.
Yeah.
If you want to share some
So
pictures, you can share some pictures. I have you as a co-host, so you can share some pictures also.
okay, we'll
Just
do.
pictures
Yeah,
of what you do. So now you also have your own construction company, also, correct?
that's right. Yep. That is not a business that I thought I ever be in, but
Mm-hmm.
I kind of fell into it, and became an expert real quick. So I don't really do it. I don't. It's not my focus, but
Mm-hmm.
when people reach out to me, yeah, I do. I do the construction work as well. If the opportunity presents itself, but I don't really put myself out there.
Okay. Okay.
Yeah.
So if you had the pictures, I'd definitely see them.
Oh, yeah, yeah, yeah. Let me. So you want me to put them in the group chat?
No, you can share if you want to share the screen. You can share the screen.
Let's. How do we do that? Let me see here. Da, da, da.
So what made you start? What made you start the construction company, though?
Um, like I said, after renovating, you
Mm-hmm.
know, close to 30 properties fully got rented. I had and still have with my subs, my plumbers, my electricians, and they love working with me.
Mm-hmm.
So, it's kind of like, they kept calling me for work. And I was like, I like working with these guys. So I
Mm-hmm.
kind of just, go out and look for work when they want work, or if something, like I said, something falls in my lap,
Mm-hmm.
I'll get the crew together and we'll knock it out. But
So now you
it's
said,
just Mhm.
yeah, no, go ahead, go ahead.
No, it's additional income, obviously, but it's not a focus. Like I'm more focused on building the portfolio.
Mm-hmm. Okay.
I just enjoy that more.
Okay, so you said they love working for you, with you, or for you. So what's
Hmm.
what's the secret? 'Cause sometimes people have problems with contractors. What is the
Yeah.
secret of them loving to work with you, for you?
So I had to learn. I mean, I'm a very type A, analytical kind of guy, right?
Mm-hmm.
So the first 3 to 6 months was tough with them because they're more blue collar, less concerned about timelines and budgets. So, I would get upset with them pretty quickly the first 3 months, but I realized very quickly I had to sort of dumb that down and realize the value that they're bringing to the table, which is huge when you think about it, right? If I can't get these properties to perform, i.e. renovated, it don't matter how many properties I buy, they're just going to sit vacant, right?
Right.
And I'm just going to bleed. So I sort of had to change my mindset, and I was like, well, these guys are actually way more valuable than the $200 a day I'm paying them, right? So once I changed that mindset, I started buying them pizza every time they wanted. Every couple of days when they do a good job, you get them beers, you take them out to eat. Small stuff like that goes a long way with these guys. I like to tell people, even though they're blue collar, they're just like us, right? They're looking for a long career at a company that cares about them, that gives them, benefits that they care about, and opportunity for growth. Right. And that's the other thing I did too, right? I gave guys that wanted more opportunity to lead the team or different projects. I give them that leadership opportunity so they feel good about it, and they care more, because that's what they want, right? So it's became a management, job that I sort of learned, during my corporate days. Right? And instead of being the employee, I was the employer, and I sort of, it just worked out.
Great. So I'm gonna turn it over. Ask anybody has a question. I'm gonna ask Pierre a question. Any questions out there? Pierre, ready? Jay, you got a question, Jay? Sharon? How you doing, Sharon?
Yeah, question. What made you choose industrial rather than retail or other types of asset classes?
To be honest with you, once I saw that macro demand supply issue, I just didn't see it in retail. I mean, office is still going through a tumultuous time. Retail, when you think about it, a lot of it is discretionary income, right? So there's risk there in an inflationary environment. And like I said, I still think, the correction hasn't happened yet. So for me, industrial just looks like a better play over the next 6 to 9 months. But coupled with the fact, like I said, for every 3 million or 2 million truckers, there's only 400,000 spaces in the whole country, right? That's a major problem nationwide. So to me, that I'd rather attack an opportunity that's larger and, I guess more opaque right now, right? You can't go on the MLS and look for triple net lease comps, per acre in anywhere in the country. There's no central depository for that. So the market in this specific niche is still, unknown to most. And I kind of want to get in early before it's no longer a secret.
And Boss has a question. Get you. You have a question, Ms. Thomas?
No question. Great call. Okay. Great call.
Okay. Marquise, question?
Not at the moment. I'm just soaking it all in. I do like how you made the pivot and made the transition. I think that was a very, very smart move, especially the way you say things may have been drying up in the single family space in the Philadelphia area. So I thought that was a good move.
Thank you. Yeah, we'll see if it works out. But yeah, that's kind of what we're thinking, at least for now. Because the other thing too, right? There's also institutional buyers for this stuff, right? So don't get me wrong, I'm not really looking to be a truck parking landlord, right? There's institutions out there that will buy these finished products from you at a much lower cap rate, right? I'm seeing 10, 12 cap rate deals, but when you sell it to what are some of the names? It skips my mind at the moment, but anyway, there are institutions that will buy it from you at a 6 or 4 cap, 5 cap, right? If you have it stabilized, because that's just what they do, right? So that's sort of the other potential exit there. It's not just operating truck parking forever. There's a very large potential exit as well that's pretty lucrative, at least on paper.
Okay. So there's a question from Tiffany Ward here. She says, how can people get started in this space? So let's twist that. How did you get started looking into this space?
In the industrial space?
You talk about truck parking, right?
Mm-hmm.
So how do you get started into this truck parking space, looking into this?
Right? Yes. Yeah, so my partner has one of his ex-colleagues from Goldman has a friend that works at a fund down there that invests in industrial assets. So he put us on to the opportunity.
Oh, okay. Oh, nice. Mm-hmm. Okay. All right. So more or less, it's really this is part of the industrial space then.
All worlds surround Atlanta. Atlanta is where it's at.
Okay. So Tiffany, the answer is this is all about industrial space, right? And obviously, you're like you said before, you're an analytical kind of guy, right? So I'm sure you analyze what'll be the typical returns that you get on truck parking versus multifamily.
Mm-hmm. And I'm sure there's multifamily deals out there that you can get double-digit caps, but I just don't see them at the moment. I mean, don't get me wrong, if those do exist, we would move on, right? Like we're not just gonna be industrial investors and just solely focus on that. We're still very much open to multifamily deals, but I'm just not seeing them. I mean, maybe others can correct me, but
so now, what Tiffany was asking though, what kind of returns do you see? You said obviously you underwrote these deals, right? You underwrote a deal like this. What would be a typical return on a truck parking?
So you can get IRRs between 20 and 30%. Cap rate 10 to 13, and like I said, the real money is in the sale, right, to an institutional I guess fund that has a portfolio of this stuff, and they will pay a premium for something that's turnkey. I mean, they don't really like the smaller sites, like anything below 3 acres. And that's sort of how I frame my criteria when I'm reaching out to brokers. So they want stuff 3 to 100 acres, nothing smaller than that. And yeah, it's a growing market.
Yeah, because even here in New York City, there's a place in Manhattan, 100 Fish Street. It's like in Harlem, and it's a gas station. The guy bought it. Somebody bought it, saying whoever owned the land, they put the fence up. Now it's the truck parking, right? So you got the ice cream trucks, this, that, and the third truck. And I was like,
Yeah, and it's not only trucks, right? There's equipment, there's RV, storage, all that stuff can be parked on these spots.
Okay.
And just to put some numbers around it, let's say 10,000 an acre, triple net lease. If you pay $750 to $900 for that, I mean, right, per acre, and it's a 10-acre site, and you do the math. Right? Like you can easily make your money back in a couple of years.
Right. So Tiffany had put her information in chat with her bling card. Tiffany, any more questions? Does anybody have any questions? Well, I got one more question. I have one more question. You talked about the industrial space, your next step. Where do you see yourself in the next 5 years?
Married with kids, hopefully. That's what I'm focused on. Yeah, hopefully we'll have a larger portfolio, maybe a couple hundred acres of this iOS space, hopefully. But yeah, just always just looking to learn, grow, and hopefully I'm smarter 5 years from now than I am now. Yeah, but I'm not a type of investor who's just going to focus on. If I have a portfolio of different stuff, like I said, single family, multifamily, as long as it performs, and I'm getting a decent return on investment, and it's easy. This is the other part too, easy to operate. Like I totally underestimated that when it came to the single families, scattered site, running, having guys go to 3 different houses in 3 different neighborhoods is very different from multifamily, right? 3 units on 1 roof. And like I said, a municipality, and it for me, at least for me, I want to grow in a real estate space that's I can manage it on my own, and it doesn't take away from my time, such that I can look at other and bigger opportunities. Because once it starts distracting me that much, I'm getting rid of it.
Okay. All right. Okay. Thank you, man. Thank you. Thank you very much. Thank you very much, Pierre, for your time.
Yes, sir.
Before we go, everybody, please turn your camera on, right? So I can take we call it a zoomie, right?
Okay.
Which is a picture. I'll take a screenshot. So Sharon, can you please turn your camera on? Marquise, please turn your camera on. Matthew, you've been here before. You know the story. You know the drill. Matthew, you there? That's right. Get the bed right, bro. Get it tight. Oh, look at Tiffany's even up. I thought you said you're feeling sick. All right, Tiff. Thank you. Matthew, come on, Matthew. Waiting for you. All right. Hopefully Matthew comes on the second time. Everybody, please smile. Thank you. So you're 32 and 32s.
I also want a full disclosure, folks on the call, we're very open to partnership, right? So, if we can structure a deal in your local market in this iOS space, and you come on as a partner, locally on the ground, at least to help us, manage stuff and grow, we're open to partnerships as well. Great, if anyone's interested in this space.
So once again, it's on the top of the chat, but Mark, put your information in the chat again up here. All right. Mm-hmm. All right, Tiffany, ready, Tiffany? Come on, tell Ricky, come on. Tiffany, here we go. Where's Ricky at? Put Ricky in here. There you go. Where's Ricky? There you go. Thank you. Wow. He getting old. One more time again. Thank you. Thank you very much. Thank you very much. Pierre, thank you again for coming on.
Yes, anytime.
I want to thank everybody for coming on. I'm just going to end the recording. You can stay around and talk some more. Just thank you for coming on to Financial Independence to Small Multifamily Investing. Thank you again, Pierre, for bringing value, adding value to
I hope meeting. I did.
You did. You did. Mm-hmm. You did. Believe me, you did. Right. And thank you, shooting straight from the heart.
Yes, sir.
Hey, great evening. Thank you.
All right. Take care, guys.